have with us the management of PC Jewelers. Remember, that stock now will replace Orient Power in the S&P BSE 500 index. And on that, of course, the stock has been up 8% yesterday. This change comes in with effect from tomorrow, March 7th. The management of PC Jewelers, that is Sanjeev Bhatia, the CFO, joins us. Mr. Bhatia, thanks much. There will be heightened interest in your stock now that it is part of the BSE 500 index. So we are interested in knowing how you progress in terms of sales and profits. Can you give us an idea whether your sales growth of 40%, which we saw in this quarter, is a pro rata growth that we can forecast for the coming quarter as well?
Yeah, the quarter 4 is also as good as Q3, and in this quarter perhaps we will get a more better diamond gold jewelry mix. So our sales are on the tracks. The fundamental of the companies remain as strong as ever, and our expansion plans are also on track. So we are really working on our financials and as well as physical parameters.
Okay. How many shops are you likely to open in terms of physical expansion? What will the tally be at the end of FY14?
Yeah, we should be at the tally of 50 stores at the end of FY14.
And what are you now? How many stores now?
We are at 30.
Okay.
Okay.
30.
Some of your larger peers like Titan are indicating, Mr. Bhatia, that because gold prices are benign and we've seen some stability there, there is a pickup in jewelry demand, and the wedding season gone by has also been very strong. What's the macro experience with PC Jewelers so far?
No, we have seen a steady demand. We have seen a steady strong. We have not seen any major spikes or downtrend in the demand, because we are basically in the field of selling wedding jewelry, and the wedding jewelry demand is always stable. It doesn't move really. It gets only preponed or postponed due to sudden price changes, but overall it's a very steady growth. Yes. So our experience is also same like as with Titan. We are experiencing a steady growth.
Okay. Well, I want to stick with the store sales and what impacted store openings and what impact it might have on volume and margins. Are you opening any stores in the fourth quarter, or have you opened? What kind of revenue growth can you expect in FY14 because of this 20 extra stores that you're talking about?
We have been growing for the past few years at an annual growth rate of nearly 30 to 35%. And as the number of stores ramp up, the growth should basically remain in these parameters, because as the stores get matured, the older stores start showing slightly lower growth rate, but the newer stores then take up from them. Okay. So overall, whereas I cannot exactly discuss the figures, but I feel a growth target of 30 to 35% is a very reasonable target.
Okay. There are some observations from analysts, about your EBIT margins. For example, your making charges that you charge to your customers are slightly lower there as compared to peers. Also, on the foreign business, the EBIT margins that you earn are slightly lower. In that context, will you be able to hold your margins as compared to peers? What's the outlook on that?
I really do not think that our EBIT margins are lower than any of the peers. Basically, but frankly, as our diamond jewelry sales would increase, on which we are working very hard, and they have been growing over the years, this would have a direct impact on our EBITDA margins. Regarding direct comparison with our peers, frankly, I won't be able to comment on this thing. But we are working on individually. We are working on our margins, and we are confident that we should be further able to improve those margins. And
okay, not to directly compare what you would do versus your peers, just to say that Titan also is getting aggressively into diamond jewelry. In that, will you be able to hold your pricing, or because they have a stronger brand, you might have to compensate a bit on pricing?
No, see, this is a very good question. But let me assure you that market for diamond jewelry is just opening up, and there is a huge scope with the increasing gold prices. See, diamonds were always an aspirational item, but they were beyond reach of the general public. But now with the increasing gold prices, even the middle class finds that is as affordable to purchase a diamond jewelry set vis-a-vis a gold jewelry set. So initially if a family was buying 4 gold jewelry sets only for the wedding, this thing, now they are purchasing at least one or two diamond jewelry sets as well. So we really do not feel, and we would be happy if the Titan aggressively promotes a diamond jewelry, because it is opening up the market even for us.
Clearly, I'm not falling in that category.
Market
Mr. Bhatia, many people don't fall in that category. No, you know, you were speaking about aspirations. Actually, when you look at the way two-wheeler sales and four-wheeler sales have done, aspiration may be there, but ability to pay doesn't seem to be. And it's clearly waning for a whole host of consumer goods. Are you not expecting, or are you not seeing any blunting of demand at all?
No, not in the wedding jewelry space. Not in the wedding jewelry space. See, in the wedding jewelry, everybody has got a budget, and they try to remain with that budget. And this does not necessarily, obviously, if the income level of the family.
Surely you have a market. Surely you have a market of people who are not getting married as well.
Ma'am, with the increasing population of the country and this thing, we are hopeful that more and more people would get married.
No.
And more and more people would come
Mr. Bhatia, I am referring to the fact that even people who are not getting married would be coming to buy jewelry. So a denting of ability to buy would be there if the entire economy is not able to buy so much. Are you noticing any blunting of any fall in demand at all from your customers?
See, you are very right. In the segment where the gifting or the investment space, if you have to gift some jewelry item, yes, that demand goes down, surely. So there's within an overall jewelry demand, there are a few segments and sub-segments which would show a decline.
Okay. All right. Just finally, to get an idea from you in terms of margins, what is the capital expansion cost for one store? How long does it take for you to make it up in terms of being a profit center? And therefore, what will you do by way of margins, for instance, in FY14?
See, we don't invest in real estate. We take any building on long-term lease, and then we built it up as per our specifications. The exterior, the flooring, we also put in a strong room, and we generally spend an average of about 4,000 to 4,500 per square feet. So for a 5,000 square feet, our total capex would be to the tune of 2.25 to 2.5 crores. And the main cost goes to stocking up the store with inventory. And we expect our stores to break even during the first year of operations itself.
Okay. All right. We'll leave it at that, Mr. Bhatia. Thank you very much indeed for joining us. So that's about PC Jewelers becomes a part of the S&P 500 index from tomorrow. We'll take